There is only one part of the market where you can get returns like Mike Markula and his 900% annual return on Apple, turning $250,000 into $203 million in just 3 years. Or Peter Thiel's investment in Facebook that turned $500,000 into $2 billion. It's not in stocks. The market is down almost 20% this year, and tech stocks are down 30%. In fact, in this part of the market, investors made a 133% return on Palantir, while stock investors are just breaking even. It's right here that Lemonade investors made a 172% return on their money, while the stock investors are down 72% since the IPO just 2 years ago. Now, it's not to say that those aren't good companies and good investments in the future, but if you're not investing in this one part of the market, you're probably missing out on the best returns. In this video, I'll show you why every investor needs pre-IPO investments. I'll show you how private equity investing works and an app that opens this world up to everyone. I'll then reveal 3 pre-IPO investments you can invest in right now, including Elon Musk's SpaceX. Hey Bowtie Nation, Joseph Hoke here, and excited to do this video. Those of you in the community know this is where I got my start as an analyst for venture capital and a part of the market that most investors never see. But this is also where you see some of the best returns for investors. This is a chart comparing private equity returns across 2,100 funds against the MSCI World Equity Index, so those stock returns. And you see here, that pre-IPO private equity investing has beaten in every time period. Over the last 20 years, private equity investing has produced a 12% annual return, more than twice the return on the stock index. I want to highlight some private equity investments I'm watching right now, including your chance to invest in Elon Musk's SpaceX before it goes public, and then show you how private equity works. But you know, we can't get started here on the channel without that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. All the pre-IPO investments I'll talk about today can be found on the Disruptor app, a private equity investing app that makes pre-IPO investing affordable and easy, investing as little as $1,000 in a company. You can invest in private tech companies just as easily as buying a share of stock. Analysts at Disruptor narrow deals down to only the best companies at that pre-IPO stage and show you details like market opportunity, business model, and risks for each investment. You can make your investment and track your portfolio of companies right on the app. Previous investments available on the app include Airbnb, Palantir, and Lemonade, which saw a 172% exit for investors before the IPO. I'll show you how to get started on Disruptor later, but what really got me interested in this app, easily the most interesting deal I've seen in a long time, the ability to invest in SpaceX, Elon Musk's space exploration company. Now, this investment closes August 18th and is currently priced at $69 a share for a company valuation of $127 billion, making it the second most valuable private company in the world after ByteDance. SpaceX has already raised $9.5 billion in previous funding from investors like Fidelity Ventures, Google, and NASA to tap into that huge growth potential in aerospace and communications. Morgan Stanley estimates that deep space exploration alone could be a $700 billion market by 2030, along with launch services at $32 billion and satellite internet a $19 billion market, according to Allied Research. In fact, a survey by Morgan Stanley found institutional investors and industry experts believe SpaceX could be one day more valuable than Tesla, currently valued at $808 billion even after this year's sell-off. Now, as a private company, SpaceX doesn't report financials, but as of 2019 had revenue of $2 billion, and Morgan Stanley estimates that the Starlink satellites launched that year are generating $500 million plus in annual revenue alone. You can find more information on the deal with a link to Disruptor below. The company is forming a separate LLC to hold its shares in SpaceX, in which you can invest. But remember, this is only open until August 18th. We've still got 2 more early stage investments to highlight, but I want to explain what private equity is and how it works, because I know this is a part of the market most investors never see. Private equity is investing in startups that aren't ready to issue stock on the public markets yet. So these companies go to firms like Google Ventures and Peter Thiel to get funding until they're ready to IPO, sometimes called angel investing also. It's this early stage funding for those new companies that really helps the company grow to the point where it can sell shares in an IPO or attract a buyout from a larger company. And here's the best part, because these investors are able to get in before anyone else, the returns can be really high. A study by Willamette University looked at 3,000 investments in these early stage companies. Over a 3.5-year holding period, angel investors averaged a 27% annual rate of return for about 2.6 times their money. About 1 in 10 investments returned 5 to 30 times their money, and 1 in 20, around 5% of the portfolio investments, returned over 30 times the investor's money. More than the higher returns, though, is the potential for these early stage investments to protect you in a stock market crash. This is a study of the correlation between a seed stage portfolio and the returns on the NASDAQ stock index. And I know this is only exciting to the nerds like myself, but this shows the returns don't move together, that returns on private equity investments don't depend on a rising stock market. And that means when your growth stocks in the NASDAQ plunge like they have this year, your pre-IPO investments can continue to produce those returns. Understand though, it's not all rainbows and unicorns either. Your money is usually locked up for at least a year and up to a few years in these private investments. And if you look at the breakdown in returns in that previous study, you see another big risk here. Just over half of these investments returned less than 1x, so less than the money you put in. And in fact, about 35% returned nothing. It is only with those moonshot investments that take the portfolio to a 27% annualized return overall. Nation, that's just the risk in these high return investments. Most don't become the next Google or Amazon, so you need to put together a portfolio of at least 5 to 10 deals to spread out your risk. If you're too late for SpaceX, another startup investment you'll want to watch here is Neuralink, Elon Musk's brain connectivity company, with investments here open until September 9th. The company was founded in 2016 and believes it can solve a number of neurological disorders, restore mobility, and treat paralysis just by sending signals from an implanted chip into the brain. Neuralink is valued here at just $6 billion for $40 a share and could lead the market in neural implants, estimated to reach $13 billion by 2030. The company is already generating as much as $50 million annually and has raised money from Google Ventures as well as Peter Thiel's Founders Fund. And Nation, I do not want you to think I'm just hyping up these investments. There are significant risks, not just in these companies themselves, but with any early stage investment. Make sure you read that risk section in the Disruptor app and understand these types of investments. For example, with Neuralink, of the 23 trials in monkeys with implanted chips, 15 died and all had health effects. So clearly, Elon has a few things to work out here, but it is an interesting idea. I've got one more pre-IPO investment to highlight, but I want to help you make your own decisions on this with 3 tips for private equity investing. 3 very important steps I learned as a venture capital analyst. First here, folks, you have to do your homework on these. This means looking into each investment, analyzing the financials available, the market, and only investing in what you believe to be the best. The Disruptor app helps with its own due diligence in every investment on the site, but you need to dig in here and spend some time as well. It's a good start, but you can't count on anyone else's due diligence as your own. Second is to invest in a portfolio of companies, at least 5 to 10 startups. Just like investing in stocks, you don't want to put everything in one company. So even if a few of your startups go nowhere, investing in a handful is going to give you a better chance of finding those that are going to really boost your returns. Third here is just understand what these investments are. Startup investments are long-term and high risk. And that means don't stress out about the short term because you're locked in anyway. Do not get frustrated when one investment flops because it is going to happen. The failures, in fact, usually flop fast, but the winners take 3 to 5 years, so give them time. The third startup I'm watching, and I swear I didn't set out to make this the Elon Musk video. The guy's got 10 kids, for crying out loud. It's amazing he gets anything done at all. But the Boring Company is valued at $5.7 billion for $20 a share and open until September 8th. Musk started this one in 2016 as well, creating low-cost transportation and freight tunnels with loop and hyperloop technology. It's received approval and permitting to expand the initial 1.7-mile tunnel under Las Vegas to a 29-mile route connecting casinos, the city's football stadium, and eventually the airport. Maybe not as boring as the name implies, the company could actually solve a range of problems from traffic congestion to environmental problems around commuting. Research and Markets estimates the Hyperloop market could grow to $9 billion by 2026, an annual rate of 36% from just $1.9 billion last year. Check out the Disruptor app with the link below and see how to invest in startups like SpaceX, or click on the video to the right for the 5 short-term investments I'm watching right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.